Welcome to Thinkin, a podcast series by Kautilya School of Public Policy.
Hello, welcome to Kautilya School of Public Policy. You are watching our policy podcast, Thinkin. In today's episode, we are going to discuss about a very important topic, that is digital financial inclusion. Financial inclusion has always been a main policy agenda for the central governments and central banks across the globe. Generally, financial inclusion is referred as providing an access to affordable services to the low-income groups, financial services and different type of products. In India, since independence, there have been many efforts are being taken by the central government and Reserve Bank of India. We have the schemes like priority sector lending, schemes like lead bank, promoting microfinance, SHG, and so on. Despite that, even today, some large sections of Indian population, they face difficulties to get a formal credit from the banks. There is a problem of money lenders who exploit and harass the people in the low income group, and that's why it is called as private loan is not less than death. So in this context, we are going to discuss about income group in this country, and to discuss this, I am joined by a very important guest, a very special guest, Dr. Subbarao, former Reserve Bank Governor and now distinguished faculty at Kautilya School of Public Policy. Dr. Subbarao, welcome to this episode of Thinkin.
Thank you.
Now, when we talk about financial inclusion, it is always been there. Now we see that India is taking a lead role, as recently in G20 presidency, India through its leadership has formed a new global partnership for financial inclusion. In 2008-9 period, you were acting as a Reserve Bank governor. You must have seen from very close quarters this last 15-year journey. What is your take on this?
Thank you, Audumbar, for an introduction and for that question. I think digital technologies have been a big game changer for financial inclusion. And I'm happy and proud to say that India has been an intellectual leader in the use of digital technologies for deepening financial inclusion. Actually, if you take a long-term perspective, for several decades, both the government, central government, as well as the Reserve Bank of India have been trying to deepen, push financial inclusion. But it proved to be an uphill task because financial inclusion degenerated into giving a bank account to everyone. So it became a target-driven program. We were opening bank accounts, but those bank accounts are not being used.
Yes.
Then something dramatic happened about 10 years ago.
Yeah.
That dramatic thing that happened was the Jam Trinity.
Yeah.
Jan Dhan Yojana,
Yes.
which is the no-frills account,
Yeah.
Aadhaar, we all know, and the mobile phone. All three together have become a big game changer for deepening financial inclusion and taking it across villages in virtually every developing country in the world.
Yes. Yeah. So you mentioned about the accounts are not being used, which are also called as a dormant accounts.
Right.
So do you think that this digital approach to financial inclusion has the capability to bring to the fore a tailor-made products to the low-income group?
Well, digital technologies have helped financial inclusion so far from the payment side. We have the UPI in India, which is an astonishing innovation that people can pay from one phone to another, and that's being replicated across several developing countries in the world. So what poor people want is four things. They want savings, they want remittances, they want credit, they want microinsurance. What digital technologies have done is to make it possible or make payments accessible to virtually large sections of population. There's been inclusion. But in as much as savings, microcredit and microinsurance are concerned, I believe the penetration has not been as deep. Digital technologies can take it there, but the credit worthiness of people has not improved. That's got to come separately.
So you touched upon my next question. You also mentioned about UPI. Now UPI is being considered as an exportable model that India is taking lead. I'll come to that later. But when we talk about the literature of financial inclusion, access is one point. so far it is considered as if you give an access there will be financial inclusion, but now it is recognized that access is not enough, you need to have usage and quality.
Absolutely.
So do you think that this digital financial inclusion will lead to kind of going beyond that access perspective, and it will help poor to save more money, as you were saying?
I believe so. I believe so, because although payments has been the entry point for financial inclusion across the world, because digital technologies have actually come in from the payment side, right, through the mobile phone. But the hope and expectation is that we will take it forward and include all the services that poor people want. Because if you just give them payments and remittance facility and call it financial inclusion, I think that'll be incomplete. Can digital technologies help in this? Yes, they can. They can help in making microcredit, micro insurance, and even savings easier, because it's the transaction cost is much lower, and appraising the creditworthiness of a person becomes more efficient with digital technologies. Why are poor people not able to get loan from a formal financial institution? Because they're not considered creditworthy. So if digital technologies can help appraise the creditworthiness of a person who, even though is not been in the formal financial system, I think that will help a lot, and I think digital technologies have the potential to do that.
Yes. You are talking about many points, digital technologies and digital payments. When we talk about digital financial inclusion, they are saying that digital payments is a foundation step for financial inclusion. What do you make of that? It's just a follow-up question.
It is a foundation stone in the sense that it's the entry point. Virtually everybody has entered the digital financial system through payments. But as I said, if it stops there, that will be disappointing and also disconcerting.
So you are indicating for digital credit as well?
Of course.
Yes.
Of course. Digital credit, in the sense that, I'm not just talking about disbursement of credit through a digital mechanism, but what do you, if you got to give credit to a low-income family, like microfinance, for example, you have to appraise the person.
Yes.
Disburse the credit, monitor its use, then recover. So all these functions are there. Digital technologies can help in two ways. They can help reduce the transaction cost, because lending to poor people is costly, because it is small ticket, low value, high transaction cost.
Yes.
Okay. Digital technologies can make it efficient, reduce the transaction cost, so it's easy to disperse and make the disbursement and monitoring more efficient.
Yes.
The other way digital technologies can help, and this is not come into practice so much so far, but hopefully it will, which is that, as I said earlier briefly, digital technologies can help appraise a person's creditworthiness. For example, through the browsing data.
Like CIBIL score.
CIBIL score, yes, you're right, absolutely, like CIBIL score. You look at the browsing data of a browsing behavior of a person, you can assess the aspiration levels. You look at the positional data, and if a person is at the same place, same everywhere at the same time, you know that the person has a fixed employment. If your person's shopping habits, shopping behavior, you can discern their creditworthiness, etc. So what digital technologies have made possible is to harness big data efficiently and put it to a variety of uses to make financial inclusion more meaningful.
You made a very interesting point about the small ticket size loan. So when we look at our population, up to 80 to 90% people work in informal sector, and they have the need of small size loan, as low as 5,000 to 30,000. So digital technologies can solve that issue of providing small loans at a cheaper rate.
Absolutely. Because transaction costs
reduces,
have come down.
Yes. So one more important point when we talk about digital financial inclusion, we have to look at the one segment that is elderly, women, and large segment of the people who are residing in rural area. There is a penetration of internet and smartphones, but this group is vulnerable even use these
Right.
kind of technologies. So will it create a digital divide? Means again people are saying that digital financial inclusion will remain in limited to urban India. So what do you make of this? What is your opinion?
I think that is a misconception.
Hmm.
In fact, the comparative advantage
Hmm.
of digital technologies, I believe, is that it can go everywhere.
Hmm.
And the cost of going far will be much, much less than taking physical banking. For example, earlier, if you had to serve a village with a bank, you literally had to have a bank branch there and staff there. That was quite expensive. And then the next generation was banking correspondents. Each bank appointed its own banking correspondents who went with a handheld machine from one village to another.
They're also called as a business correspondent.
Business correspondents.
Yes.
But what digital technologies have made possible is that the same person can be the BC for a number of banks and can actually sit in a village and serve people. And the vulnerable groups that you mentioned, old age people, elderly people, handicapped, physically challenged persons, old women, etc., they can be reached with much less cost. So I believe that digital technologies can help financial inclusion not just in terms of covering the population, but even in terms of covering vulnerable groups within the general population.
So before I go to the next question, I just wanted to know your opinion or your thought on, like, we are talking about digital technologies. Digital technologies can eliminate human interaction. And so when a farmer go to bank, he has to interact with the bank officials. But digital technologies, you don't have to interact. So what is your opinion on this?
Digital technologies will remove human interface to a large extent. But I do know that rural people, small farmers, low-income people, they actually want a human presence on the other side. There is that human angle.
Yeah.
That is very important. And I believe that just the use of digital technologies will need not eliminate the human interaction.
So we need both.
I'm not saying we need both, but if the other side of the transaction, that is the borrower or the client, feels more comfortable with the human interaction, it's possible to devise a mechanism whereby a lot of transaction work is done using digital technologies, but at the cutting edge there's a human interface,
Yes.
So that it becomes a more fulfilling transaction.
Absolutely.
But I'm not saying that it is necessary, but if some people want it, it can be done.
Yeah, like a phygital model. Like, yes.
You got a nice phrase for that. Yes.
Yes. So we see a lot of digital innovation, a wave of digital innovation, and in that role of private sector is very important. So many new private players are entering into the banking ecosystem. Indian fintech industry is growing every year. So it seems that now that private players are competing with public sector in financial inclusion. What is your thought on this change, dramatic change that has happened in the recent years?
I think it's good that private players come in, and there is competition not just among private players, but between public sector players and private players. And if competition encourages innovation. And one of the remarkable things about India's digitally driven financial inclusion is that we got what is called the India Stack.
India Stack.
India Stack.
Open digital public infrastructure.
Yeah. So which enables both public participants as well as private players to build applications on that. So that's a remarkable thing that we have done. So if they compete and produce products and services that are most efficient, most convenient, and most cost effective for low income people, that's very good.
Yeah.
But the only thing we have to take care of, or we have to be we're to ensure is that consumer safety is protected.
Yes.
Okay, so as much as there are players, you want to encourage them, to compete and innovate. You want to make sure that consumer safety is protected and their regulators have a role to play.
Yes. So again, consumer safety, do you think is it a public policy challenge for regulators like RBI?
It is, everywhere. Everywhere it's a challenge. Okay, regulation is a challenge, and consumer protection as an objective of regulation is a challenge, because you want to protect consumers, but you don't want to impose such harsh regulation on the financial players that they don't innovate at all. Right?
Yeah.
It is possible to ensure consumer safety by clamping very, very harsh regulation on financial players with in such a way that they have no wriggle room at all. They have no room for innovation. So getting the right balance, I believe, is a challenge for regulators, and the right balance keeps shifting over time.
And we need collaboration from all the ecosystem partners for that.
We need collaboration as well as competition.
Yeah. Thank you, sir. So next point is, since we use digital technologies, as you were talking about consumer safety, there is another point that cyber supervision and cyber security is also very important. So again, from the consumer side, what is your assessment about the current trend that is happening? Like digital lending apps are mushrooming, and there is a lot of concern about these digital lending apps.
Absolutely.
That they charge exorbitant interest rate, they exploit the financial illiteracy of the consumer. So what do you think?
We talked about all the positives of digital technologies and financial inclusion, but there are negatives such as the ones you point out. One is that people can become vulnerable to cybercrime, and we're seeing that. Yesterday we saw in the media in Hyderabad the commissioner of the DGP talking about how cybercrime is the fastest growing crime in urban areas, possibly in rural areas as well.
Yes.
So we got to make sure that there are checks and the police system is educated on detecting, investigating cybercrime, but more importantly, that there is public awareness so that the public can take care of themselves against potential frauds. That's one negative of digitally driven financial inclusion. The second negative is that digital technologies can be used to catch people at their vulnerable moments, load them with debt, one debt after another, so that they're pushed into the low end of indebtedness, and then use coercive recovery practices to recover that money. So people are ultimately worse off than if there'd been no loan in the first place.
Yes.
So I think we need a lot more policing, we need a lot more of self-awareness. Public awareness about this.
So public awareness is a key. So when we talk about digital financial inclusion, India seems to be taking a lead role, and even today in rest of the, particularly in developing world, there is huge amount of population which is underbanked or underserved. So like IT and pharma, do you think that India is emerging a new player in this digital financial inclusion? Because now in G20 also that it is being considered as that India can export its model of UPI.
Oh, I certainly think so. We've been quite innovative. We've been quite ahead of the curve, ahead of most other countries. UPI, as I said earlier in this conversation, has been a remarkable innovation. Even before rich countries could come up with something like that, we've come up with UPI in a society where literacy levels are so low, awareness levels are so low, income levels are so low. It is remarkable that something like UPI has caught on, because UPI is a technology designed for the very poor. And you must have seen, as I have seen, street corner vendors who could have push cart, who were not highly literate, not highly aware, they're low income, but they have a QR code of their own.
They're also using
very proud to be using that. So India can be a leader in this, like it's been a leader in other sectors that you mentioned.
In one of your lectures at Kautilya, you said that the role of central bank is to provide monetary stability, and generally financial inclusion is not at the top of the agenda. So in developing country like India, why it is important for a central bank to promote financial inclusion, just for the sake of our audience who doesn't know about financial inclusion?
Well, financial inclusion is the objective of financial inclusion. The larger objective is to give people an opportunity to improve their livelihoods. Right? So, financial inclusion is an important objective for a developing country. What is the role of the central bank in promoting financial inclusion varies from country to country. In India, the Reserve Bank of India has been in the lead on several development initiatives, including what you mentioned, priority sector, lead bank,
rural regional banks,
bank branch licensing, etc. in earlier times. So it's possible for the central bank, the Reserve Bank of India, as the regulator of the financial system, particularly of commercial banks and large microfinance institutions, to take a proactive role in ensuring that the last mile is connected. I think RBI has a role to play.
Yes, still role to play, very important role to play. With that, we are concluding. I hope that this conversation is helpful for the people who are watching this show. In this episode, we have discussed about digital financial inclusion, its evolution from 2009 onwards. Thank you very much, sir, for providing us a very insightful session.
Thank you,
Thank you so
Audumbar.
much.
Very good.
Yes.
Thank you.
Yes.